Imagine turning your first $1,000 into the foundation of a growing wealth empire. Sounds exciting, right? It's not about getting rich quick. That's a recipe for disaster. It's about making smart, strategic moves today that set you up for massive success in the long run. Today we'll show you how to invest your first $1,000 the smart way. No jargon, no fluff, just actionable tips for beginners. Ready? Let's dive in. Before we jump into the how-to, let's talk about the why. Why invest in the first place? You see, investing isn't just for Wall Street hotshots or people with tons of cash. It's the secret sauce to growing your money over time, no matter how much you have. Think about it, if you leave your money sitting in a savings account, it's slowly eaten away by inflation. That's like watching your hard-earned cash disappear in slow motion. But when you invest, your money goes to work for you, earning interest, dividends, and growing exponentially over time. It's the key to beating inflation, building real wealth, and achieving your financial dreams. Alright, now let's get into the action steps. Step 1 is all about defining your financial goals. This is crucial because your goals will shape your entire investment strategy. Ask yourself, what am I investing for? Is it a short-term goal like a dream vacation? A down payment on a house in a few years? Or are you playing the long game, aiming for a comfortable retirement decades from now? Once you have a clear picture of your goals, you can tailor your investments to match. Short-term goals might call for more conservative investments, while long-term goals can handle a bit more risk for potentially higher returns. Okay, before you even think about putting your money into the market, we need to make sure you have a rock-solid financial foundation. Think of this as your financial safety net. First and foremost, tackle any high-interest debt you have, like credit cards. Those interest rates are brutal and can really eat into your potential returns. Pay them down aggressively. Next, build an emergency fund. This is your financial safety net for unexpected expenses. Think medical bills, car repairs, or job loss. Aim for 3 to 6 months' worth of living expenses in a separate, easily accessible account. Remember, we don't want to invest money we might need in a pinch. Now for the fun part, understanding where to put your money. There are a ton of investment options out there, but don't worry, we're going to keep it simple for beginners. The first option is stocks. When you buy a stock, you're buying a small piece of ownership in a company. If the company does well, the value of your stock goes up. Next up, we have ETFs, or exchange-traded funds. ETFs are like baskets of stocks that track a specific market index, like the S&P 500, or a specific industry, like technology or healthcare. They're a great way to diversify your investments easily. And lastly, we have index funds. These are similar to ETFs, but typically track a broader market index like the entire S&P 500. They're known for their low fees and simplicity, making them perfect for beginners. With a basic understanding of your investment options, it's time to pick a platform to actually invest your money. There are tons of great platforms out there, but some popular choices for beginners include Robinhood, Webull, and Vanguard. Each platform has its own pros and cons in terms of fees, features, and the types of investments they offer. When choosing a platform, look for one with low fees, a user-friendly interface, and access to the types of investments you're interested in. Do your research, read reviews, and pick the platform that best suits your needs and investing style. Now let's talk about how to allocate your $1,000. This is where your investment strategy comes into play. A simple, yet effective approach for beginners is the 80-10-10 rule. Allocate 80% of your $1,000, or $800, into a diversified ETF that tracks a broad market index like the S&P 500. This forms the core of your portfolio and provides broad market exposure. Next, allocate 10% or $100 into individual stocks of companies you believe in. This is your chance to have some fun, research companies you're passionate about, and potentially reap higher rewards. Finally, allocate the remaining 10% or $100 into bonds or a high-yield savings account. This portion acts as your safety net, providing stability and reducing the overall risk of your portfolio. Congratulations, you've officially invested your first $1,000. Now let's automate the process to make your life easier and maximize your returns. Most investment platforms allow you to set up automatic contributions. Decide on a monthly amount you're comfortable investing. even if it's just $50 or $100, and set up those recurring transfers. This strategy, called dollar cost averaging, is like magic for your portfolio. By investing consistently over time, you buy more shares when prices are low and fewer shares when prices are high, averaging out your cost and reducing the impact of market volatility. While it's tempting to check your portfolio every day, resist the urge. Obsessing over daily market swings can lead to emotional decisions and hurt your returns in the long run. Instead, check in on your portfolio every few months or so to make sure things are on track. As you embark on your investing journey, remember these final tips for long-term success. First and foremost, stay patient. Investing is a marathon, not a sprint. There will be ups and downs in the market, but stay focused on your long-term goals and don't get discouraged by short-term fluctuations. Secondly, never stop learning. The world of finance is constantly evolving, so stay curious, read books, listen to podcasts, and keep expanding your knowledge. The more you know, the better equipped you'll be to make informed investment decisions. Lastly, avoid emotional decisions at all costs. Fear and greed are your worst enemies in investing. Stick to your plan, trust the process, and don't let your emotions dictate your actions. Thanks for watching Money Brain. If you found this guide helpful, subscribe, and share it with someone ready to start their investing journey. Your future self will thank you. Remember, every great investor started with their first dollar. By taking action today, you're already one step ahead. Subscribe for more financial wisdom.